What is better, to be correct in trading or make money in trading? Now, my experience tells me that being right all the time isn't necessary to make money, but the desire to be right can often lead to overtrading and bad decisions. So let's dive into this idea today. Do you need to be right, or would you rather make money? Ahoy there, trader. It's Phil, and welcome back to the Anti-Investor Stocks and Options Trading Podcast, where we talk about what really works and consistently wins at trading the financial markets. My goal is to give you the correct tools, the right rules, software to assist you, a community to support you, and if you will allow me, to be a mentor to show you the way so that you get real results in the fastest and smartest possible way. Now then, let's get into it. Do you want to be right, or do you want to make money? Those two things are not necessarily needed to make trading work, and so you certainly don't need to be right to make money. So you don't need to be right all of the time. One of the things that is often mentioned is baseball, the comparisons of baseball. To be a Hall of Famer, you just need to hit 3 out of 10 balls. Again, forgive me, I'm not a big sport person, but that makes you amazing. Less than 30% of the time you're hitting the ball. And it's the same in trading. You don't need to have a huge win rate to make it work. And obviously, the better the win rates, the better the strategy. The big win rate strategies do exist. But let's just separate the system or the strategy from the desire to be right. And that's what can lead to overtrading and poor decisions. And, the key is to focus on the process, not about, the process of making money, not the outcome of being right all the time, every time, because it just doesn't exist. Again, just look at the real world of business, the bricks and mortar world. If a customer or a potential customer comes into the shop, do you expect that customer to buy one of every product, one of every colour, one of every line item? Pick your own metaphor here, but you wouldn't think that in the real world. But suddenly, trading, you've got to be right 100% of the time. And it doesn't exist. Thinking about, some of the implications of this desire to be right, and a lot of it is seated in the psychological factors and the emotions of trading. And trading, it can be an emotional roller coaster, and I personally think it always will be. So managing your emotions is quite literally vital to the long-term success, and probably the reason why I've been doing it 30 years now is keeping my position size small. And the best way of thinking about position size in relation to the emotional side of trading is it's like a volume dial on your emotions. So if you reduce your position size down to something sensible, which is what all the professionals do, then that volume dial on your emotions, the fear, the hopes, the greeds, let's just do something silly emotion, just because you think you're going to miss out on an opportunity, that volume dial gets turned down. So it's still always going to be there, but your ability to ignore it gets better, so that you can manage your risk sensibly, and more importantly, manage the emotional impact that risk has. Now, some of the things that you can do as well to help with the calm mind approach, if you like, is exercise and meditate. I certainly find that helps me, not just with trading, but life in general. I've got Crohn's disease, so I'm looking for a stress-free life and stress-free decisions at every opportunity. So I find it a huge benefit to help keep that clear and focused mind. Now, other things that a lot of my traders have had problems with in the past is taking losses. And I don't recall having an issue ever taking loss, just because of the way that I started out in trading. I always knew that I needed an entry and an exit and a profit target, and I've always done that from day one. And giving it an extra bit of wiggle room or using a mental stop loss, it never made sense. So I always place my entry usually on a stop loss when I'm trading futures or stocks, entry on a stop loss, exit on a stop loss, and target on a limit order. Those 3 things get put in on entry. So I've always had a stop loss, so taking that loss, it's never been an issue for me, but it can be an emotional roller coaster. Again, that's always there, but just having that stop loss in it is going to make things a lot better for any trader. And obviously having an exit, knowing where you're getting in and out before you even place the entry is going to be a huge improvement in your own trading and your emotional state of mind, peace of mind. Manage those emotions is really what's going to separate the wheat from the chaff, the winners from the losers. Now, if you are early on in your trading career, you are going to have a high emotional state of mind, regardless of the system or the process, because everything's brand new for you. You've got a huge learning curve. You've not got a track record. You've not got experience to draw on. So something that you can do here, and again, this has been, when I started doing this, it had a massive impact on my own trading. That's using a rule-based trading system. It's going to reduce fear of missing out because you know what you should be doing, when you should be doing it, why you should be doing it, because that's what a rule-based system is. An algorithm, AI, to use the modern term. These are all the things that we need to do to check before we place a trade. Like a pilot has a pre-flight checklist, we want a pre-trade checklist. Have all the things that I need happens. If yes, place the trade. And one of the benefits of this is we get to take all of those rules and we can put them into a computer. And again, another way of saying it's an algorithm. It's just a fancy way of saying if this, then that. So what you get to do is you can plug all of those if this, then that conditions into your software of choice, and it can spit out a performance report. If I'd done what I said I was going to do on each and every occasion, what would have been the potential? Do you have a nice steady equity curve? If you do, then that strategy's got an edge. Then all you need to do is basically follow that strategy. That's really the hard part of any system, is following it. Some things that you might want to give some thought on and reflect on, and these are more, uncommon angles of why, we have these emotional reactions, the fear of missing out, the need, the desire to be right, and it's, cognitive dissonance is one of those first things. When reality contradicts the prediction. So you want to be able to forecast and be right. And yes, price perfectly reacted off that trend line, and the MACD crossover exactly did the thing that you wanted to do afterwards. And that golden cross that you just read about, that happens. But then when they don't happen, it causes turmoil because it's not 100% perfect. You might as well be looking in the tea leaves sometimes and having the exact forecast what's going to happen tomorrow. So having some flexibility in your understanding of what to expect is important. You're not going to be right 100% of the time, but if you've got that algorithm, then you can look at the data and look at the reports and say, okay, well, maybe I'm expecting to be right 60% of the time. And if I'm right 60% of the time and if I follow my process and trade the rules and everything, all the research that's gone into it, then I should have a positive expectancy. So you don't need to be right on the forecasting every time. You just need to be right on average. Surprise, surprise, just like every other business. Again, you don't need to make a profit every day. You just need to make a profit on average at the end of the day, the week, the month, the year. You're looking at averaging it out because you're going to have good days, bad days, good weeks, bad weeks. And trading is the same. Other things that will impact trading choices and decisions: isolation. You're on your own most of the time with these decisions. So, be around other traders, so that you're not isolated, you're not making silly decisions and mistakes in your own trading. Build a support network or be around other traders that can support you along each other's journey. Also recognize when you have the potential for burnout. This is going to hugely impact your decision-making ability if you're just, treating trading like it's Nintendo. You might want to reconsider how you evaluate, when you need to take breaks. Again, I kind of have this built into my day-to-day and life routine so that I don't have burnout, not just from trading, but just from, overworking and managing my own stress levels. So have those regular breaks, keep balance, again, exercise, meditate, do things, get outside, spend time with family, and all those things are going to help contribute to help you avoid some type of trader burnout or a life burnout for that matter. So, story time. Now, the turtle traders from the early 1980s is a famous study by Richard Dennis. And basically, he was a successful commodities trader who conducted an experiment to prove that trading could be taught and it wasn't something inherent in the way that you were born or you had something that was just different for everyone else. He basically recruited 23 individuals with no prior trading experience and trained them for 2 weeks, teaching them on his rule-based trading system. These traders then became known as the turtle traders, that went on to generate millions of dollars, and it proved that a disciplined, systematic trading approach could be learned, and it wasn't just a skill that you had. So again, this comes back to what I'm trying to describe in this week's podcast, is you don't need to be right. You don't have to be the creator or the inventor. You just need to learn a systematic approach to find, filter and sort opportunities and then do it. That's the hardest part, because of all the other things, the emotional impact of trading. So reduce your position size and follow a systematic approach. So what's the solution? How do we combat the need to be right, which is human nature, and replace it with doing the right thing and following a proven process? So psychologists and behavioral finance experts, they do emphasize that the need to be right is there. But then some practical tips to help you with this is to always be learning. Learn more about the craft and the art of trading. Again, the more you learn, then the better that you will become as a trader, as a person, as an investor, however you're approaching these financial markets. But I would also delve into the world of psychology and start to understand your own psyche, your own mindsets, how you react and respond to things. If you're blowing up emotionally after a monetary loss, and notice the way I'm saying this, a monetary loss, it's not a losing trade. If you followed your process, how can it be a losing trade? It was just one of the ones that produced a monetary loss. So delve into your own psychology and start to understand what your triggers are for making your decisions and the way that you react. Again, things that I've suggested in the past are there to keep a diary, not just a trade journal, but an emotional diary, so that you can understand where your head is at before, during, and after the trades. Also, you want, if you've not already gathered, a rule-based trading system. A mechanical approach eliminates the guesswork. You can back test, forward test, sideways test, walk forward analysis. You can dive into the data in a million different ways. But ultimately, it should be proving that the system is efficient. You have a positive expectancy. And following the system after that is then the challenge. And that's that human nature. Reduce your position size is going to allow you to do a lot of things in trading. So have a rule-based trading system. I'd also suggest having a mentor. I wish I'd realized this sooner rather than later, but having a mentor is invaluable. Someone who's been there and walked the path that you're trying to follow already. Find your Yoda, essentially. And lastly, a bit more tree hugging and woo-woo, I am a fan of meditation. It is crucial for a stress-free life in general. A tool that I like to use is from centerpoint.com. If you go there, you can basically follow what's now popularly known as binaural beats. So that's it for today. Is it better to be right or make money? I think, looking back on my career, it's nice to be right, but it really comes down to, I like making money more than I like being right. And you don't have to be right to make money, but a rule-based trading system helps me approach that. So again, if you like what you've heard here today, be sure to follow and listen from the very first episode, where I map out one of my most profitable money-making strategies. And I think if you go back several episodes, I think it's 54, you'll have my latest strategy. It should be titled something along the lines of my 2024 trading method. And that's my latest approach for trading the financial markets. So if you'd like to learn more about my training and mentorships, head over to antivestor.com, or you can shoot me a message via email to phil@antivestor.com, and let's start the conversation. I've always got a lot of time for serious traders. What I do isn't right for everyone, but at least I'll point you off in the right direction. So that's it for today. Thank you for your time. Thank you for your attention and making me a part of your regular routine. Have a wonderful day, and I'll see you at the same time next time. Keep in mind that options on futures, stocks and stock option trading involve a degree of risk that may not be suitable for all investors. There is a risk of loss in every investment that you make, and it's your responsibility to assess the risks of your decisions. Past performance is no guarantee of future performance, and Antivestor provides educational information and does not provide financial advice.